There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, everyone. Hope everyone had a good Thanksgiving. If you do not celebrate Thanksgiving, you're missing out on the good turkey. So, we had a big old sell-off on Friday. We had a partial market session. Just going through some of the comments here. I really haven't had too much of an opportunity. So do note that it's probably a good chance, I guess, for at least Fernando and the Neo team are probably going to have M2 off. M2 is the more risky portion. I think that's pretty much it as far as notes from our experts. All right, so let's jump into what I choose to start this particular week off, and that is the big old drop. Now, this is always a fluid situation when it has anything to do with COVID, and at least from what I've been able to gather, which is not much, quite frankly, it isn't a large data set. So, wing it for what it is. But as many of you may know, I'm fairly well connected via tweet and or text to probably about good 30 to 40 traders in the U.S. who trade a variety of stuff and, either work at hedge funds or mutual fund or wherever. And the consensus, at least among us with very little data sets at this point, is that we don't really expect this 1.1 point, whatever the hell it is, 529B variant to be a really big issue. I hope I'm, for once in my life, with a medical prognostication, I hope I'm actually right and I'm not wrong, right? But it was an overreaction of the markets. Now, no surprise, there's other things out now in terms of these variants. There's, and I don't think this really surprises any of our global experts. They expected different variants. In some cases, I guess, from past experiences, taken some time for different versions of this virus to morph or mutate, whatever you want to call it. I'm not a geneticist. I'm not a biologist. I know enough in this discussion to be dangerous. I'm only look at this from a risk management standpoint, right? So if in fact that is the case, typically you have an overreaction by markets. Everybody gains, I don't know, some sanity, for a lack of a better analogy, over the course of a weekend. Do understand this is a great example, and the reason I'm bringing this up, and I will be harping on this the next few weeks, is that it was a great example of a low volume, not everybody at the desk day that turned out to be a high volume because of this fact of the movement. So we're looking here at FinViz. This is the futures tab. Click on day, go to charts, allows you to do just a broad comparison to everything. There's all kinds of things that jump out at us today, right? So other than the fact that, and remember, this all applies to anything that's done in currency trading, because more and more, a lot of our subscribers are moving to trade indices in either some automated or manual version on the MT4 platform, right? So I think it's important to speak to equities, which quite frankly, I have more expertise in that in the futures markets related to each index. than I do currencies, which is more of a dice roll, and quite frankly, not a place where I should be putting out prognostications, right? So, but at least from the broad standpoint of equity indexes, you have the largest and least efficient all the way to the small caps, right? This comprises mostly smaller companies, a lot of tech, obviously, with NASDAQ, and then just the broad market as a whole. So the thing that really stands out to me on this is that we have a underperformance notice all the way back to damn near the lows of the beginning of the fourth quarter, end of Q3. Bigger weakness among small caps typically portends, not always, a weakness in broader markets. It's almost like follow the leader, right? Tech hasn't cracked, but in all broad discussions of anything on a weekly or a daily or heck, even a monthly chart, we're still way up. I mean, if you look at just where we are in a weekly chart, right? So the fact that we've had to pull that, but look at these runs on a weekly chart, really pulled back that much, right? Who knows? And maybe it's an opportunity to buy. I still think it's just going to be sucking in more peeps to create more of a bubble, but that's more of a long-term thought. But Nikkei got, I mean, everything that was really levered got really crushed. So certainly Russell, DAX really took just a pounding. I mean, it's a damn near a 5% day on this. That's big. What also tells you, by the way, if you compare S&P to DAX, I don't know, maybe it's more levered, but that's twice the move down. Why? Probably because the concern is it has twice the impact on Europe, because as soon as anything goes bad, they run around and they shut everything down. But look at the moves in the energy space. I mean, it's crazy. I mean, a full $10, which kind of sucks because it's like $5 a gallon here now to fill up your cars in SoCal. But it's like $2 cheaper in a lot of other states. So, as soon as we fill the car up, right, or I should say fill both of our big SUVs up, damn thing just drops through the floor. It's just par for the course, right? But I mean, this is big. This is a huge move. Very rare we see anything like that. I mean, even if I jump to a weekly chart in the energy space, I mean, look at the size of these moves. And that's just one tail end of 1 week, right? Look at all the veracity, if you will, of these moves. So with that being said, you want to take a look at VIX. Now, I think the market reaction was a bit much, and we may get a bounce, which more than likely, depending on how these news reports come out over the weekend, things are changing fairly rapidly. We could easily see this in the 40s. If we get this up into the diabolical area, as I call it, anything of 40 and up, I would be shorting ribs, plain and simple. Okay. If you want to be a hero and buy the dips, go for it, but do it at your own peril. That's my unless it's just a complete overreaction and the whole globe's not going to be shut down again. Okay. I have a tendency to shut off anybody but the best physicians worldwide that run, or at least are in charge of one of those. It's not Dr. Fauci. I do not listen to what he has to say. If anything, y'all should get Kennedy's book on that came out on him, which shows you the real deal. But outside of that, Scott Gottlieb's a good guy to listen to if you're looking to sort of cut through the crap. I have a bunch of folks that I follow on Twitter that don't fall to the global mania of the health or WTO type systems. So you can get a cooler head opinion. Wyra Harris. There's a whole bunch of guys that I follow. I was going through a lot of theirs, and quite frankly, we just don't have enough information. So we're all sort of dangerous in our thoughts of, will pandemic 2.0 take foothold in the marketplace. If in fact it does, I have no idea what happens to inflation. I would assume it subsides a little bit. But notice what happened in the bond complex if we jump back to daily charts. Remember, you always want to understand in relation to credits, and then we can have a discussion of precious metals and currencies. They're all sort of playing their role here. I mean, big rips in this, no surprise, right? It's what's called a harbor into, or a safety type trade into credit. It's less risk, obviously, in a 2-year note than pretty much anything else, or a T-bill. So you'll see typically prices rise and yields drop in that area. Now, you've seen a lot of that happen, Lee. In terms of the US dollar, we've had a pretty big rip. So, things unwind globally, it's usually going to hit the dollar first, right? So you've had I think this one was crazy, by the way. I would have loved to have caught some of this. I mean, who knew, right? But everybody's half out of it. Anybody that's anybody in finance was not working on Friday, right? So it caught probably a lot of junior folks on the floors, and this is mostly a retail overreaction. So it'll be interesting to see what plays out when large institutional traders get back at the helm, ideally Monday, Tuesday morning. So that's why I always hold out any opinions until what they call the kiddie cruise off the desk. So looking at yen, I mean, obviously everything lifted in Euro land in relation to GBP Euro, and the dollar sold off. And obviously JPY had the biggest reaction, it ripped. But note what happened down under. I mean, both of these countries are damn near where they were, and now lower actually, because these two will get hit hard. Now from a natural resource standpoint, the fact that both the governments in these countries have gone absolutely crazy and they're chasing people down to do all kinds of crazy stuff to them. So, I mean, that's not good for either of these economies. So, but the reaction, which we'll take a look at in the charts, actually, while I'm on the subject, I'm curious where we are in terms of Bollinger Bands. Aussie USD daily chart. Yeah, I kind of figured we're down there touching it. So if anybody that's trading this in relation to the dollar, we're probably due for a little bit of a lift just because we're really oversold. One of the few times, maybe if you're doing a swing trade, maybe an argument, we hit a much lower level, which we just touched. Let's see something. Yeah, so we're not far off that reactionary low, which we hit 20th August. Yeah, I mean, I would say we're probably due for a reactionary bounce off that, which is probably worth a play. That could play out all day. So if you put a larger position on, just take some scales off with smaller on the way of the bounce. Probably the only thing that is step in front of the freight train that I've seen so far. The GBP CAD, I'm going to want to take a look at that definitely. It just seems strange. Stranger things have happened, right? All right, so let me just start up at the top here. Just a quick note on the big moving average that we hit. You can see that right here. It was due for a big bounce. And you can see where we've got moving average at 458. We've got one at 451 and down here at 446. If we take a look at I'm going to I think that if we go, maybe I'll just do like the beginning of the July period. Seems to be the place where we want to look. Let's just take a look at that. Yeah, I think that's accurate enough. This is where the value area high is on anybody that's trading anything S&P related. If you prefer to look at this on the index, it's not necessarily as high. We go back to that date, 7/1. Yeah, that's where I want to be. Notice how the point of control has completely jumped up to the high, which could certainly cap us at any bounce. And obviously that's really far away for now, but just looking at long-term levels, seems to be the value area low right here is this 4450 area, which is pretty solid support. Also, no surprise that that's the area we've completely launched out of in terms of this small correction that took place. As you can see, this moved down and we came back up to it, launched out. Ideally, that's far away to go, but again, stranger things have happened. So I would see this would be a good one of the few areas that, depending on the volume, when it comes into this area, you want to take a look at. If you guys are trading any of this stuff in MT4, this would be the big area where I would potentially step in front of the train. Let it play out, though. I mean, you'll always, your first jolt into any area, usually in equity land, gets a reactionary bounce. The problem is the people that come back in and try and buy it the second and third time down usually get your ass handed to you because the market heads lower. So don't be a hero on Monday or Tuesday. Just understand the levels I'm talking about. Qs. I should just show this real quick. This is a much more condensed level of data that we need because I only care about just this upper area. The NASDAQ, 376, value area low, 404. We take a look at the index as a whole. Again, bouncing off of moving average. I don't usually recommend trading the Dow, by the way. That's where I rarely give levels on this area. DAX, much broader. And keep in mind, the hit could be more severe to Euroland on these variants showing up, hence why we've also sliced through, no surprise, all of the moving averages. Do keep in mind, the bigger the band on the outer side, and then you move into which is a higher area of these bands, or they essentially stretch out further. As soon as something gets closer to these, and these are custom Bollinger Bands, I mean, it isn't any like, here, I'll show you the setting. It isn't any secret. Key thing is just understanding that if you have a wide band and you have a super quick move into either the high or low of that really stretched area of the band, where not a tighter area, those trades have a statistically much higher win rate if you're stepping in front of the train. Just keep that in mind. I don't know that we're going to get here, but obviously this zone down here is big support. This whole literally 15,000 all the way down to like 14.8. It's big support if you're trading anything DAX. This is a fun index to trade via Eurex in the futures markets. Just know your stuff. Big move here. This is 600. Emerging markets, I've already talked about that. No surprise. We're way down in, actually, let me just reset the scale. Way down in no man's land down here. You're usually going to move to a weekly chart, in my opinion, if you're trading EEM. I mean, we're at the edge, which is interesting. They probably just built this lower piece on the squeeze zone here. A whole bunch of factors to go into how these red and orange lines show up. Some multitude of factors. Been pretty accurate. So we're there. We're holding it. Notice it's the support of the previous peak and then the break from the peak, which was a long base. See this right here? Long, sloppy base, but essentially your buy point is when you break the long-term high, and this is one of those William O'Neill type tactics. Usually offers long-term support. Normally, if things were cooler in geo events, I guess I should say, this would probably be a buy point, a long-term chart. Not yet. So let's take a look at dollar. Again, just for perspective, weekly chart. This is the area I've talked about for a long period of time, saying that, you know, if we break this, we were just going to rip, and we did. Notice on the daily, went up and perfectly touched the top of that Bollinger Band, right? So I'm not making this stuff up, guys. This stuff is real. So the reason these bands are put in place, and many times they are almost perfect areas to trade if you have the guts to step in front of the train, right? Or just use them as a corresponding signal to something else. So we get way up there. Euros just got clobbered. You know, this is sort of that pullback area back in the pandemic of what we've ripped out of that, you know, as the dollar was weakening, you know, coming into this point. Here's that low, you know, first reaction off of the low, at least from a weekly chart perspective. We bounced pretty heavily. Now, I don't think there's anything to do with support, but just know the Bollinger Band touches are always pretty good places to, if you're not trading that, to at least understand the reaction it could have off that area if you're using this as sort of your base currency and analysis of other pairs, right, or other crosses, or using it just from a pin action standpoint, right? So pin action would have been DXY ripped into the last 3 weeks. News broke Friday, touched a really major point, at least in my opinion, reversed off of that, right? That's that pain trade again. Bonds rallied, gold fell off, and so did equity indexes. So hopefully you guys are beginning to, if you don't already, understand how all the correlations work in a perfect world. You know, we've had a lot more disruptions and a lot more uncorrelated moves in these broad markets than we have correlated, but hopefully one's movement into the other, at least me keep bringing it up, I'll give you an idea for at least how to analyze this from a macro perspective. Outside of technical analysis, the relationship between these markets to each other, which can be completely cattywampus at any given time, right? But you want to at least understand broadly how it should operate. What else? Do keep in mind that at least as far as the last couple of weeks on a central bank front, one thing I kind of had pulled out is that some of Christine Lagarde's comments, if you don't know who she is, she's a very smart lady, president of ECB, which is the European Central Bank's version of the Fed. The question came to her of, you know, of tapering, and it was a post-meeting press conference where Lagarde said in response to a question of whether the ECB would coordinate tapering with the world's other central banks, she made comparisons for good reason are odious, which that sort of term was funny because we're not thinking about the same economies, right? So Tom took that as a fairly incendiary comment. Who cares, right? I mean, there's different facets to each of these central banks. They all have different goals. Most of them are in line with each other in terms of what they want. But I think it's important to understand that, you know, I'm always telling you guys in these pressers, right, to keep an eye on. It's you're looking for these outlier comments. That's my point, right? So this is a great example of, you know, you always have written remarks, and many times these remarks are released to the press or the AP wires. So the marketplace typically has a good idea what's going on, but she just took a jab. I thought it was actually kind of funny. So since Lagarde's comments, a lot of the futures markets, certainly the German Bund futures, they've rallied a bunch as of November 19th, and then they dropped again. So real yields tumbled a negative 3%, while the past week brought news of an increase in COVID cases. But the bund yields have been in a decline. So I think that this exacerbated, at least to a certain degree, some of the pin action that took place in the DAX, because you always want to try and find a why of beyond just, hey, it could be a lot worse for them in Europe if this is, I should say, if these variants, plural, are worse. So at least the consensus is that there's a possibility that the ECB will diverge from other central banks in monetary policy, right? Or essentially diverge from their major peers, at least. But I would imagine, if if you're always looking for a canary in the coal mine in this whole thing, it would seem to me, if I understand money supply correctly, which isn't really acting that normal, any weakness in economies obviously is affecting corporate earnings, thus bringing equities back down from a PE standpoint, right? But I would think the markets would at least be somewhat celebratory, because tapering's off the table if any of these variants come back, right? I mean, unless your emerging markets, and some of them have really raised interest rates, as you may have heard, hence why EM's getting kind of clobbered, or at least a little more clobbered than other areas of equities as far as market size or capitalization of a market, right? It's because of the fact Brazil's raised rates, and so have a lot of, look what's going on in Turkey. And their currency's going poof because they're making some crazy moves. And I haven't paid a lot of attention to what's going on in Turkey. I don't consider it to be even the slightest bit of an issue as far as, but those will say, well, these are how the dominoes start to fall. You have issues in, crypto markets getting clobbered, and some emerging currencies start to go nuts. And a lot of this were really crept up, by the way, in 2008 and through some of the currency crises, as you guys may have heard, in the early 90s. It started with emerging markets currencies. I don't know. I think that the major currency markets and broad developed markets are more stable now to have something like a Turkey just broadly sweep into those other areas. But as always, I could be wrong. So let's take a look at a euro. All right, so it doesn't look like it appears to be, but I'm telling you, this one spot, 1180-ish area, this whole zone, probably showing more support than what technical analysis is viewing on the screen. So just keep that in mind. Does that mean you trade the bottom? I don't know. The problem with any of this is that I could have the greatest plan and teach the greatest technical analysis, but it isn't going to amount to a pile of shit if there's really bad news that comes out next week. Nothing, you could take everything I said this entire weekend other than just understanding how markets work and throw it all out the window because it's wrong, right? So that's why you never really want to just be like super aggressive with, yeah, this is what's going to happen, right? Because, the market can hand you a dose of humility, and I always like to joke. One of my clients always says, hey, like, because a lot of my clients kind of watch some of these, they've sort of caught on to my macro, and I think a lot of them appreciate, just my humor and all this. But one client approached me last week. He's like, Steve, you always talk about being wrong all the time, because you should focus on being right. And I'm like, that's where you're wrong. Because if I focus more on how I can be wrong, I am much more prepared from a risk management plan. So Any case, US. That's all I want to say there. Pound. Let's go back to daily here. Reset. Go back near the bottom. Gotten a dose of bounce. I think this is probably an example of running for a better currency. You would have thought it would have had worse of a day based upon how much the yen got clobbered, which I know has kept some of this rally down. Euro much stronger. Also more weaker from the standpoint of just what's going on. US CAD, very interesting. So again, touch of the Bollingers, pulled back slightly. We're up near. This one I can't seem to explain. So maybe just better left unsaid. Here's all the chart points, why we've made this particular move where the dollar got crushed in other areas. I don't know. You know, maybe, and probably part of this is a pin action of how bad natural resource stocks got clobbered on Friday, including the commodities. This one was surprising. Don't know how to explain this one. You can see the levels. Take a look at GBP CAD. So this whole 1.7070-ish area has had a material resistance effect. That's a pretty big move. Let's say top 4 in the last 6 months. Is that right? Looking at all these long wicks. This is what's called a hammer reversal, by the way. I get a lot of questions. It's the difference between a hammer and an island, right? An island would be, or any kind of spinning top or whatever. The point is it's a reversal. Anytime something, here's a candle here, if the higher highs and higher lows are still above the high of the previous day, it's an island reversal, meaning that, or it gaps way up and then comes all the way back down to the previous day's high, regardless of the height of the wick. Okay, typically tells you it's a reversal. Usually you can go back in, depending on what it is you're trading with that. This would be a higher time frame chart, not some low time frame. Typically something in a 240 minute up. When you see something like that, it usually portends it's going to trade back to the lower zone of wherever it is, or wherever the profile is showing towards the bottom, which is exactly what happened here. I'm hoping Neo recognizes this, why I'm constantly bringing this up. So I know Fernando says he watches my stuff occasionally, so just trying to give him hints as to what things it should be looking for, as it may already do. That's pretty much all I want to say there. I addressed this, didn't I? Yes. Daily? Yeah. AUD, NZD, that's the chart. Know how many times we've come up to this area and not been able to sort of peek over it. Spot gold. I thought this was actually quite interesting. A lot of people think that the problem with this, in explaining this, and this is just a daily chart, we were able to, I don't know, have a little bit of decent insight here. We thought it was going to rip, but it just came right back down inside the range, right? I think the problem is it's just this leverage thing, you know. When the bat phone's ringing from New York's margin department's telling you that you've got 6 hours is a hedge fund to liquidate X amount of percentage of your leverage. And remember, typical trading and or funds can have up to 20 times leverage, whereas the retail trade, at least in the US, you could typically just have 1 times leverage, at least in terms of purchasing marginable equities. But this has been surprising to me. I figured we'd see a rally, but it just seems like they're just throwing out the baby with the bathwater on something like this. Again, that's not what I would have expected to happen. And there's somebody out there that just really, I should say, a group of that just really wants out of their gold positions, and that's always got me suspect. And who knows, they could just be head faking the marketplace. But I mean, these gold bugs have just been screaming about this metal for a long time, and they're still living in the heydays of this. Here, I'll show you. Show the ultimate heyday. I need to get a monthly chart on this. So ever since, and it's too bad I don't have data back to the early 80s, because it would probably show a much better where the mania took place, and then it took forever to get back. I mean, so if you had held gold thinking the world's coming apart, you did better in treasuries than you did in gold for this period of time. Because at least the treasuries paid you a dividend. And then the markets just took off in this precious metal. And this is where, obviously was the whole sellout, the financial crisis meltdown. And, a lot of the individuals that were in this space, did real well, in some cases 4 times on your money or more through a period of 4 to 5 years. And they became emboldened. But just look at it from this perspective. Somebody that bought into a gold fund, right? And I get it, some of them spin dividends off and all that, but if you bought into an ETF or somewhere in this high area, look at how long it took you to make money again. Now you could say, well, I had some compounding dividends, okay, great. So, but whatever, you got to this point, you finally started making money, which is the 19th of August. Let's just invent a date. From the 11th of August. You had 8 years where in most cases you were down 20%. More importantly, this asset did not perform well for you. And then it broke out again, came right back down. The long term, when I look at a chart like this, and obviously this is a precious metal, it carries a lot of other but ifs than what I'm talking about, but just from a pure technical analysis perspective, every time we get up to these levels, long term, somebody's a seller. Question is, who is it? How much more do they have to sell, right? Important to know long term. Don't know the answer to that. Could be wrong. But at the same time, that just doesn't seem like long term you want to be an owner, right? If you take a look at a chart of almost anything else, non-metal based and equity land, the chart tells a different story over this period of time. Much, much greater lift, right? Not saying all your money should be in equities, right? But the point is that you want to be diversified, right? As much as possible. It's the biggest thing I run across right now among younger millennials investing. I would say probably well over 85% of them have all their money in one thing or a group of things. And I can tell you, there is going to be some tears shed if a lot of these markets take the beating that they did in parts of the early 90s, right? 2000 through 2003. I always joke with them, do you know what happened between 2000 and 2003? At least to some of the smarter ones on Twitter. Can you explain to me what took place between 2008, top of the market, if you will, in late 2007, all the way to the bottom, March of 2008, And if you can't tell me what happened and why, you're doomed to fall into the failure of repeating that again, right? Risk management. Just because you could tell the story of what took place during that period of time doesn't make it, but at least it will help you recognize some of the signs that will be more than likely slapping us all in the face at some point, that things are about to get really ugly. Just a thought. Let's take a look at crypto. Go back to a daily. So big area of support broke. Can't tell you what's going to happen here. It seems to me that we probably, if things get ugly and don't bounce from here, we're probably going to go back and trade inside this zone. Spent some time here. We broke from it. I think the dip buyers will be in force right in this area. Ultimately, I think this is support. At some point, if we can go back down to that area and hold for a little while, and let's say variants don't pose a significant global threat, right? Keep in mind, I'm trying to just envision the Goldilocks scenario here. I think that maybe it's a buy. The lower level down here in terms of 30 would also be a buy. This is not an example where, hey, Steve said to buy here and he said to average down here. No, I didn't say that. I said that ideally, if I was a buyer of crypto, I'd want to see it at 20. Trade for a little bit of a period of time. Hard to tell what that would be. I think this would be the buy point. Oh, well, we're never going to get to 20. Hey, it could be right and I could be wrong, right? But I could just tell you that nobody thought Cisco Systems, which was sky high, would ever make it back down to single digit stock during a correction, which was a beautiful time to pick up everything. NVIDIA, Microsoft, Cisco, Intel, you name it. Pick them all up. They were the common stocks. ASM, right? ASML for those in Europe. ASM Lithography, a great company. These guys just kill it. This is ASM right now. So they're in the Netherlands. They make the chip equipments that make the semiconductors. That's all I got to say about Bitcoin. Do note that a lot of these stocks you see in this list, it's a small list, but many of them, especially something like a Celsius, is rolled over. Just these top IBD 50, just superstar stocks. Roblox has been strong. Actually, daily chart, yes. So this is kind of the stuff I look at. NVIDIA has been one of the strongest in all of the NASDAQ. Same thing could be said for AMD. You haven't had a lot of rollovers among the top, and these are mostly just semi-based guys, which things have been strong. But, if you start to see kinks and or cracks in the ice in this area, that's something I would definitely be concerned about. Because semi is one of the strongest globally right now. What else do I want to address? Euro GBP, I thought this was interesting. I know a lot don't trade this, but had a really big support that I felt we'd hold. Now right back up in the thick of the sideways trade. I don't know if you guys saw this. It's of particular note how fast these Canadian currencies would just get clobbered. Keep in mind a big chunk of this is that energy trade. Led to a lot of weakness in, not necessarily this one, but AUD USD, right? Demand for global energy in whatever factor could be severely hampered in terms of demand if everybody goes back in lockdown. I know I'm kind of jumping all over the place here, but I've got to go with what I see. What else is I saying? So my sort of take on comments from ECB, comments from other banks is that, I don't know, the Europeans really sort of need to be more concerned about its policy of lower for longer than, stepping outside or breaking from their major peers. Seems to be quite one-dimensional goal in a situation that requires taking a look at money supply from just a heck of a lot more than just horse blinders. Who knows? Maybe it's time for a G7 meeting. All right. Let's see what else. Let's go into the calendar here. I haven't talked about this at all. Always make sure you shift forward to Sunday. The month, our calendar here. All right, so coming into last couple days and then the final month, who knows if this is Santa Claus rally melt up into year end is going to continue. I think it's all going to hinge on whether or not Friday was an overreaction or not. I hope for the sake of us as global citizens that it is. But looking, we essentially have got 4 weeks left in the year. Let's run some filters here and see where we got. Typically not, although it will be interesting. Yeah, I mean, you could pretty much promise yourself that Macklem's going to get a bunch of questions about what the hell happened to the Canadian dollar. I don't know if he's going to address any of this, but might want to keep a close eye on this. Keep in mind these times are not synced right now, but it's 11 a.m. Pacific time. Sync it up for your area, but the morning of, and then obviously Fed Chair Powell speaking on Monday. What else? We got testifying. We got comments around noon, and then early, it's about 10 a.m. Eastern time, it looks like. Testifying CARES Act. You note that one, by the way. Do keep in mind that next Friday, this is the big one, right? I have no idea how this is going to go. I think the marketplace isn't really necessarily as concerned about the unemployment as it is these inflation numbers. You get a little bit of a peek on what unemployment looks like with the ADP stuff. Always comes out on Wednesday morning. This is about 8:15-ish normally New York time. And then the big one, first Friday of the month, non-farm payrolls. We have risk both 10 a.m. both days, Tuesday and Wednesday. Chairman Powell, the CARES Act testimony. All right, so that's cool. That's all I kind of see there. So just keep in mind Fed factors place in both Canadian Fed as well as Bailey speaking on Wednesday, an hour before. Be interesting to see how it is. For those that aren't aware, Chair Powell, he will be reconfirmed by our current president, whose name is what, Brandon? In any case, wish everybody a great holiday weekend. May the turkeys be with you. If you got any questions, always feel free to ask. Do keep in mind that the best way for you guys to be plugged into what's going on is to at least listen to the recordings of your software developer. They run calls each week. All those calls are inside the AP Live calendar I've shown many times, in addition to recordings at the very least of yours truly. Got a bunch of comments here. Let me see what's going on. Looks like you guys are just yapping with each other. Listen to the advice of our resident physician here. Jeff certainly knows this stuff. All right, cool. All right. So I'm going to go back to eating turkey sandwiches, sitting on a couch and watching college football. Everybody have a great weekend. I am Steve Vettel. Try to do these calls every Tuesday and Saturday, 10 a.m.-ish, to hopefully get everybody educated and risk management. May the trades be with you.